Good morning, good afternoon, good night. Sorry I've been away. My mom passed away, so I've been dealing with a bunch of things from that. But nonetheless, we are back. We're going to talk through some statistical data setups and how that kind of works. So, what we were looking at is yesterday, August the 28th, 2025. So, it's the first thing I want to go over now that I'm kind of back. So, what we're looking at here is this is the 12-hour overnight candle, this big green box. This is just the Asia, into Asia session, the London session, and New York pre-market into New York. This is just a 9:31 minute candle, just something that's paid attention to. So what we would do is we would take this overnight setup, we're going to plug it in and look at how statistical data might help us with decision making. So when I tend to trade out of the open, I look at market profile, volume profile, footprint, and all of that. I have some other tools that I use as well, but what I'm typically looking for is an impulse move in one direction or the other, and how am I going to capture that move? So for me, it tends to be harmonic impulse patterns is what I look for. And so here, just quickly, we had a couple of those out of the gate, right? We had this small one setting up here that could possibly set up a much larger move here. Now, what we want to look for is data to support this, right? Is this what we're looking to do? Like this particular setup looks like it wants to push. So how does that work? Well, let's go pipe our data in, which we've already done. And we're going to look at high of day and low of day first. So this high of day zone is a 0.9 to 1.0. And what that means is that if we were to come back and we were to measure out with this tool, that's the 1%, right? So the 0.9 to 1%, we draw a box up there just to give us an idea of what the high of day zone might look like on average. And then the next thing we're looking to do, if we go back the low of day zone, we're looking at 0.1 to 0.2. So what we're looking at here is we're going to use our measuring tool again, 0.1 to 0.2. We draw a box there. This is kind of what we're looking at. So we've already pulled through it a little bit, but it looks like our low of day might possibly be in for a couple of reasons. First of all, the most likely time to put this in is around, the time that we put it in. So around 8 p.m. market time. All right. So if we're to flip back over and we were to look, not too far off, right? It's like 8:25, 8:30. So not too bad. So it's kind of looking like maybe this would be put in. So then the other things we want to come down and look for is just look at the midnight status, right? Midnight being just this midnight target here. It's kind of covered up, but it's this red line here. So it's just the open price at midnight. And what are some other statistical targets we look for? So we're going to look for the 12-hour candle we were talking about. We're going to look at the high, the mid, and then the low, right? So the low only has a 55% chance of getting touched. All right. And if it does, it's at the open. And so this is another thing that kind of supports the idea that our low might actually already be in. All right. So we have a 96% chance of touching the high, and we have a 90% chance of touching the mid, right? And so what is that? That's just this level right here and this level right here, which kind of lines up with that midnight. So what that also tells me is that this midnight level is more likely usually down here. So what would most likely happen in a normal scenario like this is that, this thing just slowly creeps up. And so we just get this midnight level down here that we never come back to, but we do get the middle of this 12-hour candle. But, that's just things that you kind of look at over time. But now that we have all of this information, how would we look to try to trade this? Well, into this zone right here, we've popped out. So when we come back into this zone, we would look to try to long this, right, if we're trying to take this up. So, we're looking to come back into this zone. We should pull a little more into this zone. But either way, this is kind of the area we would look to try to catch this to add down here, right? Because we know there's a 90% chance to get here. All right. Especially since we have our low of days probably in. So basically, we're looking to long the market. And so as we come down, if we come down, we'd look to add down here. Otherwise, our target's going to be this pattern right here, right? This initial small pattern up here. So we'll just say now we can't do partial trades, unfortunately, like, take scales and all of that stuff on these replays. But either way, we'll just look to see how this sets up into the open, right? We start driving, and we get our first target. So now we got this continuation long set up here, right? We just want to hold this 930 box if we're going to keep going to get the rest of this target. But remember, even if we do, we've got a super high probability of still coming back down here. So if you were to have scaled out, this probably would have taken you out, right? Expecting this thing to pull a little bit lower, right? And here we are, we're trying to bounce on this statistical target, right? So we've taken this one out, we've taken this one out. All this really left to do is get into this high of day zone, right? We want to try to get through it if we can, to get up here, right? Get an impulse move up to the high side there. And so then we play the rest of this day out, and we get into our high of day zone. We never really complete that target, though, into the close, right? Because there's the completion of our target, and we never got there. So this is a way to use statistical data to kind of help if you have targets that you are looking to hit. Hope this helps. If you want access to this data, just give me a shout, and we could talk about it.